Okay, everybody, I'm here with Doug Smaldino, CPA, correct?
Yes, sir.
All right, and Senior Mortgage Loan Officer and the owner of Hillhurst Mortgage.
Yes.
So up until a few minutes ago, I referred to you as the voice because I only talked to you on the phone and I never met you before. But you're actually the guy who got me the loan for my house.
Yes.
And that was bumpy, that was rough, it was scary. And I panicked a few times. And, you know, the name of the show is Buying a Home, Don't Panic. But I actually panicked during my loan processing thing because I remember the interest rates were just one day it's at like 7.75. Then I think it jumped. No, not 7.75, 6.75.
6.75, yeah.
And then it jumped up to like 7.25. And it pushed me out of qualifying. I remember that. Oh, my God, that freaked me out.
It was a rocky time. And it's been a rocky time even since then.
Yeah, so you're here to fill us all in on that stuff, and your business is located.
We're in Los Feliz on Hillhurst Mortgage. We're on Hillhurst Avenue, right over in the heart of Los Feliz, near the Greek Theater and Observatory. So
yeah. By the way, I'll be at the Greek tomorrow night. I'm going to see Jon Stewart.
Ooh,
awesome. That should be fun.
Amazing.
So, all right. So, what is the pulse of what's going on right now with you know, these crazy rates and people wanting to buy houses? Tell me about it.
Well, that's exactly the crux of it, John. I mean, you know, even when you bought this house, I mean, it took you a minute to find the one, and there was multiple offers. You weren't the only offer when you put your offer in on this house.
No, I was the only offer.
Well, you were the only offer. Okay.
On this house, I actually got lucky.
You got lucky then, because that is so rare in this market. I mean, it's not uncommon, by the way, to see 30, 40 offers on a house, even now with these higher interest rates.
Yeah.
So the pulse is that we have really high interest rates and we have really high home prices.
Right.
And we have a very tight inventory. And that's the situation. It's really hard because there's limited inventory, prices are high, interest rates are high, and there's a lot of people on the fence that are not only waiting to jump in, but there's already people that are making offers in the market. So it's really tough to buy right now. But it's
qualifying. But let's talk about qualifying.
Qualifying is harder because, like this house, we closed about a year ago, right?
No, this year and a half, a little over a year and a half.
Okay, year and a half.
This November's 2 years.
So this house is definitely, this is a good case study, actually, John, because when you bought this house, this house is probably 10, 12% higher than when you bought it, the market value. So you did the right thing, right? You didn't wait. Most people are on this whole idea of waiting. And I don't know what the whole thing of wait is.
Yeah.
It's worse. It would be harder for you to buy today than it was a year and a half ago.
All right, let me jump in and say this on that note, because people are waiting. So I was one of those guys that was waiting a couple years earlier because I noticed the house prices started going up. And understand, as a home inspector, I'm in these houses every day.
Yeah.
I'm seeing what people are buying, and I'm like going, oh, my God, they're not really going to pay that for this, are they? These houses were so bad. I mean, they needed so much work.
Yeah.
So I'm like, there's no way this can be sustainable. So in my head, I'm like, oh, this will change eventually. Like, this will stop or reverse itself. And next year, a following year, it's the same thing. I'm like, what's going on here? And then previous to buying this house, I rented for 12 years. And I got to be honest with you, I was actually pretty happy with it. Until about the 11th year is when I started, my inner timer started going off going, you know what? I think I need to find a house.
Yeah.
Something just told me to do it. And then I always wanted to be in this neighborhood. And so I was talked to Kevin Brennan, that you and I both know. Thanks,
Great
Kev.
Guy.
And I said, hey, check out this house because there's no for sale sign out front, but it says it's for sale online. So let me know if it's for real. Sure enough.
Wow.
The house was already on the market for 3 weeks and those really no activity. And I think it was because I only had one bathroom.
Yeah. Well, that's a concern with a lot of people.
That's a real thing. Yeah.
Good for you. You did it. But the point is that, like, John, it's like you did get in. That's the thing. You did get in. Now, I guess the thing is, I try to tell people, like, I'm a CPA, and just mean a lender, and I have a lot more knowledge than your average lender, as you know, because I can merge the tax discipline and mortgage discipline together.
Sure.
But, when you look at the tax benefits, they're staggering. You get, just to name a few, the mortgage interest on the loan, tax deductible to the extent of $750,000, going up to $1 million, actually reverting back to $1 million in January 1st, 2026. So interest on $750 currently deductible, interest on $1 million will be deductible in 2026.
Really?
Then you have, the big wealth builder, the big one. Here's this may not be the biggest, but this is a biggie. $250,000 or $500,000 tax free.
Really?
Notice I say tax free, not tax deferred on the sale. When you sell the house, like you bought, wherever you paid for this house.
Right.
If you make $250,000, that's net of closing costs and improvements and all that. Still, there's a $250,000 gain. You pay zero taxes.
Really?
Yeah, and for taxpayers and clients that are married,
right,
that exemption goes to $500,000 as long as you live in it 2 out of the most recent 5 years. So you take the sale date, do a look back, a 5-year look back, say, oh yeah, I lived in it in year 1 and year 3, or year 2 and year 4. It doesn't have to be consecutive.
Okay.
Any 2 years, you're golden.
That's interesting.
That's a mega wealth builder.
Yeah.
There's no tax. You know how much a tax would be on a $500,000 capital gain? It'd be pushing $200,000, but zero. And only in real estate do you get these amazing. It's the mecca of investments.
I think you and I need to have an off-camera accounting class together to talk about what I'm doing here. Maybe
absolutely,
you can give me some good tips
John.
later. Yeah. So, interest rates are the big scare, correct?
Yeah. Mm-hmm.
Okay, so I'm a believer of don't worry about the rate. Get the house you want and refi later. I think that's a very sustainable way of looking at it and a very easy way to understand it. But people are afraid, I can't get into that. I'm going to have to pay too much. Yeah, but you can always drop that later.
Right.
Interest rates are always going to go up and down.
Always.
It's history, right?
Right. And then we think about when you I get it. I would say during COVID, okay, interest rates were artificially low. Okay, 2-3% is crazy. But right now, interest rates are artificially high. Okay. Now, when the rates really start moving up, they started moving up. Let's call it January 2022, right? So they started moving up slowly but surely, up in 22, up in 23, and here we are in 24. We're only 2 years and 4 months into the cycle. That's nothing.
That's a good way of looking at it.
That's nothing. I mean, cycles normally go for
that's some good perspective
for 5 years. So when I sit here and people are crying about interest rates, I go, today they said, we still have a long way to go. These rates could be high for a while. Like, of course they are. It's a cycle. I would say at least we're not going to see rates come down for at least a year. I mean, dramatically. We're going to see a little downward pressure on rates. We might get into the mid 6s, but if we're going to break below 6, get into the 5s, not till 2025-ish. Mid 2025-ish, maybe closer to 2026.
Well, here's a good question for you. I mean, I can ask you this as a homeowner. So right now I'm at 6.25. Mm-hmm. That's the loan you got me. And now at what point, how far should I wait for a drop to make it worthwhile to refinance?
Well, look, when you refinance, there's you have to look at 2 things: the drop in the rate and the cost. You don't want to spend $10,000 to save $100 a month. You know what I mean?
Right.
So we have to look at what makes the most sense. Generally, I'm a big believer in no cost loans. In other words, the lender pays the closing costs for you. And if we could drop your rate, let's say your loan amount is, $750,000. If we keep it at $750,000 and we lower the rate for no cost out of your pocket, great. If we save you $300 a month.
Where do I sign?
Exactly. Where do you sign? It's a great deal.
Yeah.
But if it's, I hate paying people seeing them pay a lot of money to refinance. Now that's not a blanket statement. Like like I did a refi the other day for someone she had about $40,000 worth of credit card debt and she wanted to invest in another property and she needed liquidity. So we paid off her existing loan and we gave her about $150,000 cash out, paid off all her debt, and even though her rate went up on the house, her overall payments dropped by something about $1,800 or $1,900 per month.
Oh, that's great.
Yeah. So it's a major win for her, and she's got no debt and money in the bank and money available for another investment.
Yeah, my next step here is to when the time is right to refi, I want to pull money out of here and I want to add an addition on the back here.
That's smart because you could, you're going to add value. You could add an ADU to the back. You can get rent off of that or use that. Maybe that'll be your recording studio. I don't know, but the bottom line is, you're going to add value. Every dollar you put in is going to be $3 out. That's the way I see it.
Okay, no, that's good information. So, Doug, and one of your questions you had put out to me was, should somebody purchase a home now or wait for rates to come down? We're kind of touching on that now. So, Joe, the average homeowner, what would you say to them if they walked into your office and asked you that? How would you handle that?
Gosh, John, it's just this is my challenge. This is welcome to my this is the cross I carry every day. Is just talking to people. They want. I just want to sit them down and. By the way, I'm starting my podcast. Did I tell you the name of my podcast?
No, what is it?
It's going to be called Bring It In. Because we're going to bring it in. They're going to bring it in, John. We're going to sit there and say, okay, guys, we're not giving this to attorneys and PhD students.
I don't know. I don't know if you should have a podcast. You're not that good of a talker.
I know. I'm
just kidding. You're a great talker, man.
Thank you, John. But anyway, I want to bring it in. I want to just talk and basically just have a heart-to-heart one-on-one.
Set expectations. Yeah,
and just say, listen, guys, the whole thing, you don't wait and then buy real estate. Okay, you buy real estate and then you wait. This is a
good point.
Look, John, have you ever seen the movie Unstoppable with Denzel Washington?
Yeah.
Was that the coolest movie? The locomotive that was out of control.
Yeah.
Okay, real estate in our world is the locomotive. Okay, it's unstoppable.
Yeah.
This high interest rate environment. All the things that are happening, the inflation, the Ukraine, blah, 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 has done absolutely nothing to real estate.
Right.
Real estate is a juggernaut, okay?
Yeah.
Now, that might not be the case in every single, Wichita Falls, Texas. It may not be the same situation.
Sure,
I'm talking in our local market, it's a beast.
Los Angeles is huge. There's so much work out here, and there's so many homes.
There's so many big corporations and technology. Everything's moving to LA. A lot of stuff is coming out of San Francisco, Northern California, even in Silicon Valley, coming to LA. There's Google's in LA and Apple's and Netflix. It's just crazy. There's just so much opportunity here. Yeah. People don't care.
And YouTube is here.
Yeah, exactly. Yeah. Exactly. And there's so much opportunity here. That's why there's limited supply. That's why these real estate prices just keep going crazy.
Yeah. Yeah.
So to answer the question, should people buy? I want to see people buy right now today. They just need to get pre-approved. We need to sit down. We need to bring it in. We need to look at their payments and the budget and be sure that they understand what those payments look like after the tax benefits.
Yeah.
Okay.
Yeah.
Because my goal, John, isn't to stop. Like even with you, that's so smart. I love the fact you want to add investment here. But hey, down the road, a few years, let's go buy yourself a duplex. Let's get you a rental property. Let's build a real estate portfolio.
Yeah.
I mean, you could do a lot of cool stuff with real estate.
Yeah.
And you can really build wealth fast.
Well, here's a good point. I don't know if you tell your customers this, but this is something that I literally wasn't even thinking of. I knew there'd be a bit of a tax shelter when I bought the house because now I'm an owner again. I'm not a renter. So I just had my first full year of paying mortgage, which is in 2023.
Yeah.
And I just talked to my accountant. And he goes, by the way, I said, how much you going to owe? He's like, oh, you're going to owe this much. I'm like, you realize that's like 2/3 less than what I paid last year? He goes, well, that's because of your mortgage.
Yeah,
I was
exactly.
Like, yes.
That
was beautiful. So that when someone's worried about the high interest rate for now, just to get in the door, you can lock it in, you're in the game.
Right.
If you get in, you're in the game, and then you can just refi later. But I don't know if you approach it that way, people know they're going to have a tax break.
Always. That's the secret sauce, the tax benefits. And what you're talking about there is the current tax benefits.
Yeah.
And didn't even take into consideration the future tax benefits, like the deferred tax sale, the $250,000 or $500,000.
Right.
Do any 1031 exchanges, stepped up basis. I mean, there's just such a myriad of tax.
Yeah, you got to know what you're doing.
Goodies.
You need a professional like yourself to walk you through all that.
Exactly. And that's what we do, John. We give a much higher level a consultation service. I want our people to understand what they're looking into, what they're doing. I want them to build wealth. I love to see people build wealth.
Me too. I like
it gets
people.
me excited.
I like
I'm
watching,
excited. This house is Definitely more than you paid for it. You made money already.
Yeah, I know I did. It was called timing.
That's absolutely.
My telling you, my inner timer went off, and in the past, I've had other homes, and I've made out pretty well.
You picked a great one.
It's all timing. So, one thing I wanted to do is thank you in person for getting me the house. I was meant to start with that, but I got distracted. So thank you
for being such a great client, John. So it was great to get you in here.
Even though I panicked.
You're good. You're okay.
All right. So let's see. I want to let everybody know that I did panic when I was going through the process, as I mentioned a little bit earlier. And I was like, oh, man, are these guys going to pull through? I actually talked to another lender.
Well, you got 6.25%, which is an excellent rate.
Yeah.
And at the time, rates were pushing higher.
Yeah.
Luckily, we locked you in at the right time, because another day it would have been about 6.5%. Bumped us out of qualifying. It was pretty tight.
It was I was walking a tightrope.
Absolutely.
Okay, so what percentage of a rate drop is worth refinancing? I think we touched on that a bit. So how's it work? Is it a point, half a point? How does it typically work?
In general, depends on the loan size. The larger the loan amount, the smaller the rate drop you need to make it worth it.
Right.
But in general, the rule of thumb is about 1%.
1%.
1%. Because keep in mind, like, the other thing where other lenders don't tell you is that if you're into a loan, like right now you're a year and a half into your loan, right?
Yeah.
28 and a half years. Now we can refinance you on a loan for 28 years. We don't have it doesn't have to be a 30-year fixed.
Oh, really?
Yeah. So we could put you in a 28, 29, 27-year loan, 26, anything you want. But if you compare apples to apples, going to a 28 and a half year loan, you want to be sure it makes sense and that you're saving enough to go for the hassle, the aggravation. Right. But yeah, if it's going to save you $300 a month and not cost you anything, that's where it really starts to make sense.
Well, for example, what are the odds of me saying, hey, I want to refi, see what you can do for me. And then you say, okay, well, I can refi. You could take maybe 150,000 out or 200,000 out, whatever. And with the new refi rate, you're still going to pay the same amount of mortgage you were paying before with the loan.
Yeah, it does happen.
Is that a possibility?
Absolutely. Sometimes if the rate's high enough, like there's people that, like let's look at what happened last year. What was the big news of 2023? It's the writer's strike, right?
Oh, yeah.
So the writer's strike just,
I drove by them every day.
Yeah, I mean, look, it hit probably, 75% of our client base.
Wow.
And so what happened is a lot of those folks that are getting loans now or got loans towards the end of the year last year, went back to work. They got loans that are much more expensive loans. Like they're what we call non-QM loans. They're based on other things other than tax returns. So they're more expensive. Right. I still recommend them. But those are the folks that are going to be, they're back to work. They're going to show a lot of income in 2024, file their 2025 tax returns, and we'll refinance them in a year and a half. And they're going to be nice. So those are folks that could possibly take money out, and it won't have much impact on their monthly payment.
Oh, that's cool.
Yeah.
That'd be good because you're saying it'd probably make more sense for me to wait till a 1 point drop.
Yeah, I think so in your case. Yeah.
And you think that's probably gonna be what you're predicting? What 2025 around there?
I'd say end of 25.
Yeah. Okay.
Yeah, we got a ways to go.
Yeah, we do have ways to go. It ain't gonna happen tomorrow. That I know.
No, it's not.
Now, let's talk about actually refinancing. Now, I recall going through a deep cavity search during the initial loan.
Yeah.
Wow. You guys wouldn't even let me pay a $300 revolving credit card payment that I had that just came due. I'm like, oh, no, I'll take care of it. No. We have to do that as part of the escrow. And I'm like, no way. Are you kidding me?
Tight. It was pretty tight.
It was so tight. And so is that going to be the same process for the refi, or is it a little bit more lax because you've been paying the mortgage all this time?
For the most part, it's the same. But keep in mind, it's based on current tax returns, not on what you showed. Right. So if you're making more money, which most people make a little more every year, it'll probably be a little bit easier.
I see.
So it may not be as dramatic.
Just make sure. Yeah.
The process is the same, but may not be as bad.
Just make sure you get no credit card debt.
Yeah,
and
credit card
excessive
debts,
car payments or stuff like that.
That's a good point. We make credit card debt. John, there's part of the problem with the low inventory is you've heard the term house locked.
Yes.
Right? Okay. So what does that mean? Well, you have people that would otherwise like to sell and move or buy something else, but they're in their 2.5% rate in Atwater Village or Highland Park or Mount Washington, and they're saying, I ain't going to go get rid of this loan. The problem is, in the meantime, they're racking up $30,000, $40,000, $50,000 worth of credit card debt. So you look at they're paying on the credit card debt, they're paying like 20-25% interest rate.
I know, that's nuts.
But they have that 3% rate on their first mortgage that they want. So we got to, part of the process of education, like, look, guys, you're paying, on this $50,000, you're paying the blended rate of all this is probably 7-8%. Let's get you, let's just refinance the whole thing, put it into the mortgage, and then you'll have no debt. Yeah. Or it's okay to sell it.
You got to pay your statement balance every month. Otherwise, you're going to get nailed with that high
and
rate.
There's a lot that I just saw something. Credit card default rates are way up.
Really?
Way up. So, the economy, they talk a mean game about how hot the economy is. It's not as hot as people think. And, that's usually a telltale indicator is the credit card default rates. And you're seeing them, like every one of the banks are reporting much higher default rates in their credit cards. So, and it makes sense because people are racking up the credit card debt and not using home equity indebtedness to, finance whatever they're buying because they don't want to get rid of that low interest rate first.
Right. Gotcha. Yeah.
Makes sense.
Well, some people learn the hard way.
Yeah.
So, Doug, one of your talking points was, what are the different lender types that we can get a loan from, i.e. banks and credit unions, non-bank direct lenders, mortgage brokers, boutique direct lenders? Fill me in on that.
Yeah, well, basically, I would put them in 3 different buckets, John. You got your traditional banks is bucket number 1. That'll be your Wells Fargo,
Bank of America,
Chase. Those types of banks. They're going to be pretty good on rates, and they still to this day do the lion's share of mortgages, but they're going to be more difficult to work with. They're going to be, you like Wells Fargo. If you don't have a 700 credit score, they won't even talk to you. They're very strict. But if you can fit the square peg in the square hole, you're going to probably get a little better rate with a bank, to be 100% transparent. But if there's any hair on the loan, for example, you had a bad year, you can't qualify of 2 years of tax returns, you had a little credit ding, you can't do, a larger down payment, they're not going to do the loan. They're going to be hard to work with.
Right.
The second bucket is what we call retail, big retail. These are your big box mortgage lenders. Okay. Now, some of the household familiar names you might know are Rocket Mortgage,
they're all over
Loan
the TV.
Depot, New American Funding, Fairway Funding. Right. These are good, big mortgage companies. They're not banks, but they're mortgage banks. They are across the country. There's a lot of good people I know that work there.
Right.
But you're going to find, because of their extreme overhead, they're going to be fast. They're going to be expensive. Okay. Right. They're going to be probably fairly easy to work with, but you're going to pay the most money. Okay. The last bucket is probably the best bucket of all, which is the local mortgage broker / boutique mortgage banker like us. We're local. We're licensed in 4 states, not 50 states. We do most of our business here in, the east side of LA, and our appraisers, our people are right here.
What states are you in?
We're in California, Arizona, Texas, and Florida.
Okay.
And there's some reasons, strategic reasons why we have relationships in those states. So we do a little bit, but California is the biggest state. And, but with us, you're working with, not only do you get access to everything, everything that the bank has, everything that big retail has, you're going to get through us, and then some. And then we have stuff that, if in case of emergency, break the glass type of thing, we have the non-QM loans. We could do foreign national loans. We could do banks. If you had an issue with, several writer clients, they had problems with qualifying now because of the strike from last year. We have a whole suite.
Yeah, that's got to be tough.
It's really tough. We have a suite of non-QM loans that are just wonderful. So they'll get in. we'll close on the house today, and next year we'll refinance them after we file the 2024 tax returns, and boom, they're done.
Yeah, that's the ticket. You got to get in the door. And that's what we're trying to tell everybody here. You got to do whatever you got to do. Sell your cars, whatever you have to do to get in the house. You can always get your cars later.
You have top ramen every night.
Rule number one, if you have a house, you can get any car you want.
Absolutely.
That's just how it goes. But if you got a refi or you're just trying to get in that first house, that car is going to be a big weight.
Yeah.
That the bank's going to look at. And I mean, I paid off 2 vehicles to get this house.
I remember.
Luckily, I had the cash.
Yeah.
I had to.
Yeah.
They said, nope, you can't have no car payments. I'm like, what? It's like, that's nuts.
Yeah, it was nuts. But
I've always had a car payment, but you know what? I'm happy they did because now I don't have a car payment.
Absolutely.
And I am not going to buy a new car.
Yeah.
I got about $100,000 in the driveway. Yeah. That's how I look at it.
You have a nice Jeep though, John. Come on.
And I got a van out there too. So I got a couple cars and everything's paid for. So I'm thrilled over that. So I'm really happy that they forced me to do that. Because otherwise, I'd probably still have to be paying on it.
Yeah, and that's the message. You know, you get it. I'm trying to pass on to all our first-time home buyers that, hey guys, let's sacrifice now. You know, you don't need the nice car right now. Let's just get something.
Right.
Let's just get in this house. Let's get in the house because once you're in the game.